Today I'm going to talk about IR35, the basic concept and how it affects you contractors and possibly some freelancers. So the first question really is, what is IR35? It's bandied around a lot, there's a lot on Google, there's a lot of talk about it, a lot of noise about IR35. And in fact, recently the noise about IR35 has ramped up as actually it's in the public domain and a lot of legislation has now been passed. But let me take you back to the basic concepts and the fundamentals of IR35. In a nutshell, IR35 is a piece of legislation that was concocted by HMRC and the government way back in 1999-2000. So it's been around for a very, very long time. And in its most purest and fundamental form, what is it trying to do? All IR35 is trying to do is assess contractors and freelancers. Are you independent enough to be able to call yourself a contractor freelancer for a particular client and actually then operate outside of IR35? Or are you just a disguised employee? So in substance, are you doing exactly the same as you would as a permanent employee or an equivalent permanent employee, but just getting the tax benefits because your tax regime is under the income tax rules as opposed to the corporation and dividend tax rules? They're the fundamentals of IR35. So what does it mean by disguised employee? What is the concept of a disguised employee, or the definition, shall we say? So let's look at this a little bit more carefully, and I'm going to give you an example. So back in the 1990s and the early noughties here in the UK, what was happening? There was an explosion of IT. So with it, a lot of IT specialists. These guys and people were very, very specialist, technical specialists in their respective fields of IT. Now, majority of them were in already permanent positions for medium to large organisations, bound by a employment contract with their employers. What was happening, and a lot of them were being advised this, is they were coming to the Friday, quitting their permanent job, giving notice to sort of cancel, or shall we say get out their permanent contract, and they were coming back on the Monday, in many instances a lot of them in the same role for the same company that they had left on the Friday, and they were coming back as limited company contractors. So in essence, what was happening is, in substance, they were coming back to exactly the same job. They were doing exactly the same thing, following the same processes, same results, with the same behaviours and the same structure, but their legal form had changed. Now, instead of being paid through PAYE on a monthly salary, they were being paid gross by the client, quite often through an agency, into their limited company. And by doing that, a whole new set of tax rules opened up for them. They were allowed to offset certain legitimate expenses, they were paying corporation tax, and they were subject to the dividend tax rules. And certainly back then in the late 90s and early noughties, this regime was far more favourable than the income tax regime, and actually remained so up until recent history. So based on our experience, years and years of looking after limited company contractors and freelancers, what we often found is, in some instances, some contractors and freelancers were getting paid up to 40% more. When I mean getting paid, I mean in terms of a combination of their gross income and their take-home pay was making them 40% better off than an equivalent permanent employee. Now you can see how attractive that was, and soon the word started to spread amongst contractors. It started to spread very, very quickly, very rapidly. In fact, a lot of agencies were promoting this with IT contractors, and then it went from going from IT contractors to the financial industry to other types of contractors and freelancers as well. And soon, before you knew it, contractors and freelancers, that way of working just absolutely went through the roof in the noughties and even in the early tens in this particular decade. So there's the reason behind why a limited company contractor really became very, very popular. That's just one of the reasons, but one of the other reasons was obviously the flexibility of working, the right to choose your client sometimes. There's a whole raft of benefits that were coming to the contractors and freelancers. So essentially, HMRC and the government were sort of clocked onto this, and they introduced the IR35 legislation. Now, essentially the question is, what determines whether a contractor or freelancer is inside or outside of IR35? That's what we're going to go through now. And there's no one particular defining factor. It's a combination of factors that determine whether you're generally in or generally out. And the key thing here to remember, as things currently stand with the legislation, IR35 is assessed on a contract by contract basis, and that will continue to be so even after April 2020. So the first factor and the first pointer is arguably the most simplest one, and that's about the contract. Now, it's a very simple one. Is there a contract between yourself, the individual, and your end client, or is it with your legal entity, i.e. the limited company or umbrella company in this case, with the end client? So it's a very, very simple one. If there is a contract between yourself and the end client, but yet your limited company is being paid, then already you're pretty much foul of IR35 rules and you'll end up being inside. Now, this is very, very rare. It very rarely happens, but we have seen instances of this happening, albeit rare. The next one is all about control. Now, this is a big one. Who controls who? Now, I'm going to use an analogy with this one, an example. Let's say in your house you invite a tradesman, a kitchen fitter in, and that kitchen fitter comes in and you've designed the new kitchen, you've told him what you want, you've made arrangement in terms of the finances, and they've given you a quote, you accepted, etc. Now, that tradesman's going to come in and finish the job. It's a project for him. Now, whether he comes in at 8 in the morning or 9 in the morning or 10 in the morning, quite often than not, it's not for you to determine, it's for you to negotiate with that tradesperson. The key thing is, as long as they finish the job on budget and in a reasonable time as agreed, then you more or less are going to let them get on with it. Now, that's the key factor here. When you go off as a contractor or freelancer for these large organizations in particular, what happens is the culture of that organization is very, very much blends with permanent employees. When contractors come in, they very much blend in terms of that culture. So what does that mean? That means you start at a certain time. It's very unlikely if you turn up to them and say, well, I'm going to come in at 11, I'm going to go at 9. It's very unlikely that's accepted. It does happen in some cases, there is flexibility, but more often than not, it's not. So therefore, that's an element of control. What else is control? Well, is it, is that client telling you what to do, what work to do? Are they guiding you overly, or are you guiding them? You bringing your skills and experience to guide them. So control is a very, very important one. And again, it's one of the indicators which is generally, either in or outside of IR35. The next one is mutuality of obligation. Now, again, another big one. Mutuality of obligation is quite simple. Are you obliged to accept that the work being given to you has to be done? Or are you going in there, are you determining what work needs to be done? So again, I'll go back to the analogy of the kitchen fitter, the tradesperson that comes into your house. Now, you're going to sit there and you're going to discuss with the kitchen fitter what needs to be done, the pipe work needs to be done, the kitchen needs to be fitted in, various different things going to be fitted in. Now, more often than not, the kitchen fitter is the expert. He's the person with the experience and the expert. So they will be guiding you, although you want it in a particular way according to your design and according to whatever you've picked. But generally speaking, they're going to be guiding you. Now, if you turn up to the kitchen fitter and say, oh, by the way, whilst you're at it, could you just mop my floor? Likelihood the kitchen fitter is going to say, well, hang about, that's really not part of my remit, and I refuse to do that. Whereas again, once you're in a medium or large organization, quite often you could be on a project or you could be in what's called a business as usual role. And if you're in that particular role, it's very, very common for a manager or someone else in the team to come along to you as a contractor and say, oh, by the way, I'm just chucking this in, can you get this done? It's often that you can't refuse that. And the next and quite influential one is what's called the right of substitution. Now again, going back to that tradesperson, quite often you finalise details and the tradespersons come in and they start the kitchen. They could then bring in a junior member of their team, or they could bring in, a partner in, and they could say, here you go, here's the specification of the kitchen. I'm going to brief you for half an hour, you get on with it and you get X, Y and Z done. They can then fly off, probably gone out to give a quote to somebody else or gone to have a spot of lunch, whatever it is they may want to do. But the fact of the matter is they have that right to substitute. As long as the job gets done to the standard you want it to the specification you want it to, the fact of the matter is he can bring in whoever he wants as long as it's legal. That's the right of substitution. Now again, when you go into the medium and larger organizations as contractors, quite often what happens is you will not have that right of substitution. Even if it's written into the contract, you're sitting there, you're the expert, you're the one with the intellectual knowledge, the expertise, the experience, and it's you that they have recruited. It's you they want on board for that project or that BAU role. And if you were to turn up to your manager or whoever it may be in the organization and say, oh, hang about, I'm just going to send in a junior member of my team to kind of work for me for the day, again, it's very, very rare that in substance that would be acceptable. So again, that right of substitution more than likely in substance doesn't exist. And if it doesn't exist, again, it's more of a weighting towards being inside of IR35. The next one is financial risks. Again, let's go back to our tradesperson, our kitchen fitter. Kitchen fitter's done that. There's a fixed price that you're going to pay him, and at the end of the day, he's got to complete the job to a specific standard. And everything's got to be working. All the pipes are going to be fitted properly, the electrics are going to be done, the tiles are going to be put on, the kitchen units have got to be right. Now let's just say he's completed the job and you've gone to inspect it. He's walked off, he's gone with his money and you've gone to inspect it. Now, per the contract, most likelihood is if there are defects in the work, then you could go back after the tradesperson to recover any financial losses or get them to sort of make good those defects. And therefore the tradesperson is invariably taking the financial risk for any financial loss or things that may go wrong with the job that he's done. Now again, going to the medium and larger size firm, you go in as a contractor, you may be working on a particular project or a BAU role, but there are still risks in IT, in finance, whatever you may be doing, there are risks. Let's say you're working on an IT project on a piece of software or a process, and in the end you complete that process, but it completely falls and your input has been pretty significant in it. And it's identified that actually it's something you did in the coding that made that software fall. As a result, the client ended up with a financial loss. Key question is here, are you taking the financial risk or is the client insulating you from that? Now, in quite a few cases, the client would insulate a lot of contractors from that, but in other cases, and quite commonly, one of the reasons why contractors and freelancers have to get public liability, employees liability, and most importantly, professional liability, indemnity, insurance, is for these very purposes. So again, the weighting of financial risk. Are you taking a financial risk? Are you covered by professional indemnity? Is it a mandatory requirement? And again, that starts to influence whether in that particular point you're more in or out of IR35. The next pointer is employee benefits. Now this is a very, very important one. It does have a very high weighting. Quite often seen contracts where the end client has written in performance bonuses. They've written in certain holiday pay into a contract between a limited company and themselves. Now, when this starts to happen, what then happens is the substance of the contract starts to move far more towards a permanent employee. Because the whole idea of a contract, again, we go back to the tradesperson. If they're working on a project in your house, let's say it's a 3-month project, it's very, very unlikely you're going to build in holiday time for them. Certainly paid holiday time. You're not going to sort of give them any kind of insurances. You're not going to give them any kind of benefits. The fact is they get paid for what they do, and that is that. If they go and injure themselves, that's their problem. The time out they take is their problem. You're not going to compensate them for that. And by doing that, you are very, very, very detached from them. Again, in these medium to large organizations, if contractually they start to give you any form of employee benefit, then again, the weighting and the indications towards going more inside of IR35 start to grow. And obviously vice versa being the case. The next one is provision for equipment. Now, provision for equipment there's been a lot of debate about this one, and it's quite arguably how much weighting does it carry. Certainly in our view and from what I've seen in terms of personal experience dealing with contractors and freelancers for many, many years, it's one of the less influential ones. Provision for equipment is your laptop, your phone. Are you, again, your tradesperson coming into your house is hardly going to ask you to provide them the tools, the hammer, the nails, the whatever tools they'll need to install your kitchen. So similar applies to when you go to work for an end client in terms of the medium and large sectors. Are you going to take your own laptop? Are you going to take your own mobile phone and whatever other tools you may need in order to perform your duties? Chances are it's very, very rare. Certainly for larger organizations, and from experience, they will provide you with a laptop, they will provide you with a phone, because the reason being is security. Security is the #1 factor for them. They don't want any external equipment or hardware or software to infiltrate their security system, which is why they keep control of that. And therefore, that's one of the reasons why it's less influential in terms of provision of equipment. Albeit, having said that, if you can take your own equipment in, and you do successfully plug into the system, then it's great for you in terms of a bit of an indicator more outside of IR35. So there's the sort of list of indicators and pointers what generally determines whether a particular limited company contractor for a particular contract would be deemed more inside of IR35 or would they be outside of IR35. Now here's a really important point, and this is absolutely crucial. IR35 is a legal issue. It's not an accounting issue, it's a legal issue, but it has accounting and tax consequence. Now it's not up to HMRC. HMRC cannot determine whether a particular contract, as things currently stand, would be inside or outside of IR35. That is, the onus currently is down to the contractor to determine that. What HMRC could do is challenge the decision. Yeah, if you as a contractor decide, okay, I've done a particular contract and I've done a contract review and it's given me an indication per my legal contract that I'm more outside of IR35, therefore I'm going to say I'm outside of IR35 and that's how I operate. HMRC may come along and think, actually not quite in agreement with this for whatever reason, after the launch of an investigation, and that's when it could get tested. Ultimately, who decides, has the final word, are the courts. It's the judge, and the courts would have the final word after hearing all the evidence and considering any evidence as to whether per contract, per client, your company or that particular project assignment is inside or outside of IR35. So the important thing to know is, even if you are deemed inside of IR35 for a particular contract, that does not necessarily mean, and this is assuming you're running a limited company, that does not necessarily mean that you have to shut down your limited company or you can't operate through your limited company. Certainly when you're outside of IR35, running through your limited company as per usual. If you're inside of IR35, for a particular contract, this is for a particular client, then you can still run through your limited company. It just means that the tax calculations and the regime is somewhat different. And I've done a different video, another video, which goes into detail and explains how that works and compares and contrasts to taxation, how it works in terms of corporation and dividend tax outside of IR35 through your limited company, and then the sort of more like PAYE and NI tax when you're inside IR35 through your limited company. So keep a watch out for that video because that will explain it very clearly. Now, if there's one thing you're going to do, and if you're a limited company contractor or even a freelancer, the one thing you can do right now, if you're in a contract and you're working for a medium or large organization, and if you haven't already done so, is to get yourself an IR35 contract review. That's the most simplest thing you can do, and it's the first line of defense. So what will happen is, in an IR35 contract view, your contract between the limited company and particularly, or perhaps an agency in the middle, even the end client, will be assessed in terms of its IR35 friendliness. So this contract review is extremely inexpensive, and it's conducted by professionals. So we're talking about legal professions here, professionals, not accountants, because IR35 is a legal issue. Now, by doing that, at least then you get your contract assessed, and there's going to be three indicators. Either it passes the IR35 compliance test from a legal point of view, it is either ambered, which means it's very much in the balance, or it's going to get yourself a red, which means, well, you know, according to the wording of your contract, if this ever got tested in a court of law, then, you know, you are most likely going to be deemed inside of IR35. So well worth a small investment, well worth getting, and at least that way you can assess your options. Really hope you have found this video useful and even enjoyable to a certain extent, but really this is about sort of garnishing you and enhancing your knowledge with regards to IR35, because there are things you can do to mitigate IR35, and just having that knowledge will help you keep more of your take-home pay. So once again, thank you very much. If you have any comments, please comment below. Please don't forget to subscribe, and lastly, there is a link below. Do follow that link if you want to get an IR35 contract assessment, and it will take you to an insurance shop page. I mean, these guys are independent to us, so it's extremely inexpensive and definitely worth doing. Once again, thank you very much, and see you again on the next video.